Go ahead and welcome also the restream, recast, I believe that goes out over YouTube. If you can hear me there, we'll get started in here in just a second. I got a third application I have to launch now. All right, times 3. So we've got a few rooms going here. Simpler trading, it's a central room. We formerly called the training room. Now it's essentials, and do educational segments here in this room, and also being broadcast over this Restream software that goes out over YouTube. So if there are any questions there, then certainly let me know in that chat as well. And so we'll get started. My name is Neil Yeager. I'm one of the simpler trading and mostly simpler futures, but simpler trading traders. And spent a lot of time in the futures room, not confined exclusively to that, but yet some in the options room as well, a couple of maybe 2-3 times weekly in the options room. So find myself trading a lot of futures and some options and equity stuff. I generally run the options and equities trades on a more of a swing basis, and the futures are mostly, not exclusively, but mostly intraday. Today I was asked to be here for a pretty short little window or segment of approximately 30 minutes for purpose of like an AMA or questions and answer session. So with that in mind, if anybody's got a question to kind of kick things off, I'll look to see if we let's see. Okay. I am looking to see if anybody's got any questions. The futures that we trade a lot of in the futures room are pretty wide in scope, I would say. I think we look at the equity index space. That's usually the S&Ps, Dows, NASDAQ, Russell. And then we venture into the metals, generally and most commonly via gold, silver, and copper, although we do get some questions from time to time on others like platinum, palladium, and stuff like that. But generally speaking, gold, silver, and copper. In the energy space, mostly find ourselves looking at crude oil, natural gas, RBOB, gasoline, and heating oil or diesel fuel. Treasuries, most commonly looking at the 10-year notes and 30-year bonds, although we'll look at the 2s, 5s, and that kind of thing as well. But mostly the 10 years and the 30s. And then some various currencies, like for instance, you see I've got right now on screen the dollar index, and I'm watching that because I think a lot of things are centered around what the dollar is doing right now, kind of based on what the dollar is doing. For instance, as long as that dollar is bid, you're going to see a continuation of the break in the treasuries because the yields are on the uptick with the dollar, strength in the dollar. And then some of the U.S. dollar denominated commodities will have trouble while the equity space is also under pressure while the bonds are under pressure because the rates are on the uptick. And that'll include things like gold and copper and euro and the currencies. They're going to go inverse the dollar, etc. So we do have kind of a focus right now on the dollar, and that's why I find it, you see it, and we find it right now on the screen as one of the main, topics of conversation and watch list. When I bring over my internals and take a look here, you'll see that it's also we want to keep an eye on, well, this is basically the internals I'm watching, and that is keep an eye on the vol spread, the volume, be it mainly finding its way through on an up or a down, tick. The tick itself, actually, it's been it started out the first part of the morning predominantly negative until about 10 o'clock, where it went on the high side of the zero line here and was banging around between the zero line and plus about 600 or 700. The advanced decline, although this is on twofold, we're looking at advanced decline, but on the left axis, you actually see also this has got two advanced declines on one graph. On the right is ADD, but on the left is ADSPD, or the advanced decline of just the S&P 500, which currently sees at about a plus 28 right now. The HYG or junk bonds, because this trades generally directionally with the S&Ps. In other words, if it's on an uptick, then so are the SPOs, and if it's on a downtick, then so would be the S&Ps. And on the bottom right over here, volatility UVXY Pro shares for a look at intraday, look at the here and now, the immediate time frame on volatility versus the VIX, be it a 30-day volatility. This to me shows intraday, kind of here and now, what's important right this minute volatility. What goes in the middle bottom down there is my pick. I get to put anything I want there from day to day, time to time. As recently as late last week, it was US dollar index was on there. But this morning I want to keep an eye on Tesla because it was trading a little bit weak relative to some of the other products. Like, for instance, Apple, traded to positive by $1 over and above Friday's close or settlement. So I have to keep an eye on Tesla. Give me an idea, a read as to whether or not this may potentially be rolling over to make new lows. And we'll keep an eye on that. Another way that I prefer to, what I like to do and look at, it's a personal thing and choice, but is I look at the markets on profile basis. That is either market and or volume profile. And so we get a read on that by going to one of our profile charts, populate the S&Ps. We see that in coming into today, last week's weekly point of control or balance. Hold on, don't want to do that. Last week's weekly balance was left way up here at 4,500, while price traded all the way down here to 43 and like 50. So that's about 150 point spread between the breaking nature of the price action and where it left balance or point of control out for the week, really largely due to the way that price held up the first 3 days of the week until we got the Fed decision, wherein afterwards, things kind of fell apart down to the lows. But leaving balance value all the way up here at 4,500, which is pretty interesting because with price all the way down at 43.50. And this, notice even like, for instance, on Thursday, notice price opened near the highs and did trade down to lows, but left the point of control all the way here at the top, or balance, the most traded kind of price, that call it acceptance or balance essentially at the top, while price ended at the lows. And then we do the same thing again on Friday, open, trade, lower, close out at the lows, leave balance all the way up at high. Pretty interesting. Leaves some targets for any bullish uptick that happens to begin to unfold under whatever news may be the flavor of the day, should something happen and cause price to start to make a move and the stops start to trailing stops start to get run from the shorts last week, then certainly have some ideas, some targets to make. For instance, some of those targets this week would be, in my opinion, it would be 43.91, which is actually our bullish target for today, Monday, the 25th, and 44.08, I'm going to go one. I mean, you can see that it's 05, but I'm going to go one step further and actually call this 10. The reason for 10 and not 05s is that's also a weekly pivot, and it's close enough to 05s that I would just call it 10. So we got 43.91 and 44.10. And then where the bulls would really start to have some confidence would be back above Thursday's high, which is the gap, which is another problem for this price to be down here, honestly, because it leaves this weakness up here for us to go back up and try to attempt to kind of fill in. So once an uptick does start, I would have my sights set up here also for the idea that, and I don't know, you never do know, but should, things get nicely on an uptick, that could easily come back into and start to close up things like this gap, right? So that gap starts at about 44.20, goes into gap mid 30 and up to 40. So that's a 20 by 40 gap with a mid at 30. After that, then into the earlier part of last week's profile, which then starts to target point of control, which is up here at 4,500. So the bulls would have sights on objectives like that. Not to know that they can necessarily pull it off. Don't get me wrong. It's either going to go up or down, and I don't know which. But should this thing maybe possibly start to roll over and continue to trade lower, well, let's go look and see what that might look like. Okay, so we can see that there has been a bid since the essentially the beginning of the year. The low in March was the retrace back to the open of the year. So the March low is the same as the January low, really. So it's easiest just to mark it from the March low to the top. And if you do, we'll see that we've got a trailing 200, which is also the yearly VWAP at about 43.08. And that's just below today's low, today's low / last night's low. And then that may very well, if still yet lower, put us into this area of consolidation that lasted for about 2 months. And so what you would do is go take one of those profile charts like I just showed and set it to and you'd have to do this on a roll adjusted basis to get the December roll adjustment, because these were September contracts trading back in May. We've since rolled into December. But do a roll adjusted, which is a 50-point adjustment. There's a 50-point positive premium over and above the September prices in order to get roll adjusted prices. But what that would show, in my opinion, would be that if below this year, the 200 period on the daily / yearly anchored VWAP, then possibly into this area of consolidation that again was for approximately 2 months between the dates of mid-March through late May. And that price, I think you can pretty clearly see. You could just lay right across the middle of it and see that that's going to be about 42.30. So you're looking at if up and fail for additional downtick, then in my opinion, it would be for this daily 200 and then this area of balance or consolidation back here, which would be 42.30. So that is how I would do that, right? Let's see. All right. Oh, okay. So here are a couple of questions. Do you use balance? Initial balance on anything other than ESNQ? Yes, you can use it on anything, even equities, but they need to be equities that move. They need to be the Teslas, Microsofts, and Amazons and Apples and that kind of thing. I would think you would find it very boring to try to find a target on IBM on an initial balance. IBM is just kind of boring, maybe find some, some pharma tickers that move. There'll be your Nova Nordisks and BM Squibs and your, the things that move, right? And yeah, initial balance on those would be certainly fine. What time frames do you mostly use? What is the lowest? So, Bob C, I like to, and I'll show the screen so you can see it real quick first. Okay, here we go. All right, so I'll start with a idea of, I'm starting with a daily chart, even a weekly, to get an idea of answer this question. For whatever we're going to look at, a weekly chart. Is it moving higher or lower? Well, what do you mean higher or lower? Well, I mean, does it have a series of higher lows or lower highs? Or is it sideways with higher lows, lower highs, and just chop all about? Okay. Then down to a daily, same question. On a daily chart, is this thing moving higher or lower? Same thing. Series of higher lows or lower highs? Or is it just absolutely just range bound like that March through May timeframe that we just looked at in the S&Ps? The reason for this is because I believe that price travels either from balance and then to imbalance and then back to balance again, meaning it'll sit and digest and go sideways and create a squeeze for a period, then get some new information to serve as catalyst to go on walkabout and look for a different price, be it higher or lower. Like, for instance, the Fed recently last week. And now we've been trading lower since, right? Since an event, something caused repricing. But eventually that repricing that's through discovery will land on and create another period of balance. So I want to know, are we in the discovery phase or the balance phase? For two reasons. One, because it's going to help me figure out what kind of trading I want to do. That is breakout type trade or reversion to the mean in balance. And then two, what kind of trades you might want to consider putting on. I mean, in a range trade, you might want to do options strategies that are much different. You might want to do iron condors and butterflies versus call or put debit spreads, right? That kind of thing. So start from higher time frame and then come in. Now, once I get into now, it's time to rubber meets the road. Let's set up the day and get started. What are we going to do? I go to this chart, 39. Well, you can't see it, so I'll show it to you. Time axis. Yeah, see, 39-minute chart. So an RTH session for the market is 8:30 by 3 o'clock, which is 390 minutes divisible by 10 equal bars of 39 minutes. And so 39-minute chart. From there, I'll go down and look all the way down to as little or as low as probably a 3-minute chart, 5-minute chart, 5 and 3s. There's 81 candles in a 405-minute futures session on a 5-minute basis. There's 120, I forget the exact number or whatever, of a 3-minute. The question there is, how many different, how many candles do you want to potentially be a setup candle? Do you want, more opportunities? Well, you're going to, faster time frames going to equal more opportunities, right? Or fewer opportunities. And is 81 enough? 5-minute candles enough? There are different ways to look at this too. Some folks prefer not to look at something on a time thing that's relative to necessarily time periodicity set to 3 or 5 minutes, but yet rather to range, right? There's plenty of folks that would rather look at something based on just range, like irrelevant of time. I don't care if it spent 5 minutes or 5 hours trading in a 4-tick range on the S&Ps or something, for instance. But when it starts to move out of that range, then let's see it on that, right? And so that would be more, you do like a Renko chart for that. And the size of the Renko would be dependent upon the product that you're looking at. Probably best to set like a 4-tick Renko on the ES. That would be everybody's individual personal kind of choice. And I would encourage everybody to land on your individual personal kind of decision and not let anybody tell you where exactly to land on anything in terms of approach, right, to the markets, because everybody's going to have different level of input, i.e. time that you're willing to spend in front of things, and anticipate and or require different output from the market in exchange for your time. So is that going to be a 4-tick Renko, or is that going to be a 15-minute S&P chart? I don't know. I don't know. But whatever it is, you'll land on and figure out for yourself where you're comfortable and happy. In exchange, you're gonna want this X from the market in exchange for Y, input. And everybody's different. An example of that, a perfect example actually really would be that I shared a TSI chart with the options room. TSI stands for True Strength Index. And some friends and I developed this chart with signals, a strategy. It was a strategy based on overbought, oversold price turn off of what we defined as being user-defined variable that we defined as being conditions that qualified as overbought or oversold. And I love the chart. We originally designed it with the idea that we wanted a scalping chart. And so we did. We put this together with a 377-tick S&P. And that's what we wanted. And we accomplished that. But yet that was not suitable for many, certainly, I would say, ideally, very few people that would be interested in that level of interaction with the market. So I shared it and asked for feedback. And what I got back was predominantly that the chart was way too fast and that we should slow things down. So then I asked the question, I said, okay, well, let's experiment with some different time frames on this and then report back to me please, if you will, with, what periodicity do you find to be most comfortable and or, kind of middle of the road. And this was, by 1,000 people at the time in the room. And I got back, as you can imagine, a number of responses with 1,000 inquiries. You get back a number of responses, a lot. And what I found to be the case was predominantly, it came back at about a 3-minute chart, 3 to 5, but 3 was the sweet spot. It was really 3 and 5. 3 was the sweet spot. So here's what I found by that. One, the scalping chart that we wanted, some friends and I developed because we wanted a scalping chart, was way too fast for the masses. And as I'm older now and less energy, I agree. That's probably way too fast for me now. It's just like, I don't have any interest in approaching things in that manner any longer. But what I got back was, here's something that's pretty peaceful, calm, and easy and sort of middle of the road. And that was a 3 and 5 minute, kind of thing. So anyway, great question. But that's from personal experience and having put that question out to a number of folks in order to get an answer. Is there a good site for overall for watching commodities? Let's see. Oh, I've already closed mine down. Hang on. Let me see if I can get you an answer to that question. All right, I'm gonna put the link in the chat here. And I'll put it in the restream for YouTube also. Question here is a good place to kind of be able to keep an eye on like a bunch of commodity charts all at once. Do you only trade on the 5-minute ES? No. Thank you for the question. But no, not only on the 5-minute. In fact, I trade off of even off of tick charts. But what I do find that for the purpose of trying to be, and like I said just a second ago, remember I've experimented with this by putting this question out to over 1,000 folks at one time and getting a lot of feedback. what I found was that there was a middle of the road that kind of where everybody kind of came together, and we, sort of agreed that this was a nice little happy medium spot is about right here. And so I keep these charts up all throughout the day and night for everybody to be able to kind of see and act off of if they want to. Comes complete with signals for direction. This is a mid and a VWAP, and then the green is the open swing or open range. And so this morning you see here, for instance, this is why we chose long today. You see the open breached through the open swing, open range, came back in for a retreat. This is what we call a breach retreat trade. And then, kind of took off from there and headed for objectives. And I'll show you objectives on our other question that was asked a couple minutes ago. Thank you, from the Essentials room, and that was initial balance. So then we have these objectives. Objectives are the blue lines on the initial balance, and those are simply 50% range extensions of the first hour's range. First extensions at 75. You can see we obtained that with about a 77 trade. Normally speaking, what you would look for here would be tag that extension, come back to it, reassess either the IB or the VWAP, and then if it's still good, then reach up for the second extension, which would be 85. In this case, I do anticipate that being good for the second extension because there's also something else that's up there, and that's the overnight high. The overnight low was below this morning's low, unable to test that. The overnight high is at 80, which is above the current highs. And so I would anticipate that it's going to test one side or the other of the overnight range. So since it missed the low, we chose to try to target the high. Ideally, target for today would be that second range extension up there, 85, and maybe even Friday's point of control at 91. So additional objectives that have not yet been reach for the ES today, having broken through the top of the initial balance and made the first extension, would then be retraced back into approximate VWAP for an rebound trade off the VWAP up to second extension. And then I would even hope to kind of allow it for a little bit of maybe follow through up to prior session point of control at 91. So it's a good question. And I think that IB chart by default is maybe set to 3 minutes, but it doesn't matter. It's all based on the first hour, 60 minutes, first hour, 60 minutes. What did it do for that 60 minutes? And then from there, here are your range extensions for targets. But the range extensions are extensions of the first 1 hour. And then meaningful support for the SPY. Rodney, I would need more information from you, please. When you say meaningful support, see, I don't know if you mean intraday or if you're talking about for some additional potential for follow through to the downside on a daily chart, at which point I think if that's the question, then I answered you by saying ES, not SPY. Okay, ES, and then you can do the math for the difference, but ES. December ES futures are 4308. Anything below today's low would be 4308 and 4230. Yeah, 4308 and 4230. But for the reasons that we just pointed out on the daily chart, the 4308s are the 200 period daily and the yearly anchored VWAP, and then the 4230s is balanced in a block of trade from March through May down below. And you can do the same on SPY. All you have to do is just change the ticker on, and pull the 200 for SPY, and also look at that March through May block and put it right in the middle of that block. Precision trader all in. I like that. So ES 71 line in the sand. Okay. I think you're making a statement, not a question. So thank you. Thank you. Jennifer and the Ducks says, explain the maze methodology again. Let's see how easy that may or may not be to do. Let's see. The maze is an acronym which stands for Moving Average Zone Entry. So this will mean that it doesn't matter the ticker or the time frame. The ticker and the time frame don't matter. What will matter will be the averages, the moving averages. Okay, so any time frame. I usually start this when Jennifer asks about, explain the maze. First thing I usually do is moving average zone entry, maze, acronym. So normally, first thing I do is ask somebody to give me a ticker and then somebody else to give me a time frame. And I won't do all that today, but I'm saying basically in doing so, I'm saying that it doesn't matter the ticker or the time frame. We could be talking about, Facebook or whatever. We could talk about Apple. We could talk about S&Ps. We could talk about the NASDAQ, the Qs, the SPY, or we could be talking about, live cattle or, lean hogs. It just doesn't lumber. It just doesn't matter. It doesn't matter if we're talking about a 39-minute chart or a daily chart or a 10-minute chart or a weekly chart or whatever. It simply doesn't matter because, and this is the why, because it's just a pattern on a chart. And so the pattern itself is going to give you the entry and the risk based on that time frame. So everything would be time frame specific. So if you said, well, what's the entry? I'm going to say, well, what's your time frame? You say daily. I say, sure, let's look at a daily. But then somebody else says weekly. I'm like, okay, let's look at a weekly then. But it may be different. Well, no, I wanted to know about a 5-minute chart. Okay, well, yours is definitely going to be different. So here's what we're looking for is we're going to go and want a 10 and 20 period. I say exponential moving averages, and we'll want a 50 period simple. Okay. In fact, let me check this one, make sure this may even be the 47. I don't know where that was coming from. I'm hearing somebody else's voice, but I really don't know where that's coming from. 40 and 50. Okay. So, yeah, or even 47, 50 or something, but I want it tight. Okay. So here's the thing. Here's what we're looking for. So the maze is moving average zone, right? So I'm going to call the zone anything between, and whatever period this would be, but I'm going to call it the zone between the 20 period exponential and the 50 period simple. You can see I've also got I laid a 47 in there too, really just to get it really tight. Really, I just want to see a pocket right there. But I want to see price action anywhere in that window. Now, ideally, the closer to the 50, the better, because any closing price action below the 50 would stop out your entry and or negate your direction as previously being long. So let's talk first about, okay, well, how would you know that you're even thinking long? If 10 exponential is above 20 and 20 is above 50, price is above it all, then that's an uptrending move, at least by that definition, right? 10's above 20, at least the moving averages are stacked in a bullish fashion. Maybe 10's below 20 is below 50, and all of a sudden, all right, wait a minute, you've got prices obviously probably below that or retracing back up into it, but certainly those are stacked in a bearish fashion. So as long as 10's above 20 is above 50, then we're going to say, okay, this is more, I'm not going to say it's a trend move because there's different ways to measure trend. Trend might be, by some people's book by higher lows or lower highs. But at least you would say that this thing's moving predominantly in one direction. 10's above 20's above 50, price above it all. I'm going to say that's more bullish than bearish. until we start to get a retracement back into the maze. We just define maze as saying the area between the 20 exponential and 50 simple. So where's the entry in here and where is it wrong? Two different approaches here. One is where I can give you an absolute setup, an absolute defined must have this criteria in order to be a setup, period, end of story, non-negotiable. It is what it is. And that is that it is either or it's not. It either is the low of the move of a retracement, from a bullish move. It's the low of the move, the candle with the lowest low, and that lowest low also has to have a positive close, means it has to have rejected the low as too cheap, bid back up near the highs, close in the upper at least 50% of that candle, close above the open, close in the upper 50%, having made the lowest low for the move and rejected the low. The low is in excess, it's too cheap. If that happens, then the next candle within two candles must take out the top of that candle and trigger that long. When that happens, the low of the move is your stop. That's your risk. Okay. That's an absolute must have this criteria set up. It is non-negotiable. That absolutely is the rules that it must follow. Secondly, your question. Do y'all hear a voice in the background? I think what's going on is, I swear to you, I think there's somebody else simultaneously using this recast software, which means that I must be out of time there. So let me end the live stream, and I'm going to stay in the essentials room, but I'm going to end the live stream. I think that I'm over somebody's time in there.